Hi everyone. Now I want to discuss with you one problem and its solution in income from capital gain. So in the previous classes also I discussed a few problems under income from capital gains. If anyone wants an introduction part and solutions of few problems, you can go back to my lectures, to the previous lectures, and this is a lecture that we are going to discuss one income from capital gain problem and its solution. Let us go and discuss it now. So this is our present question. Let me discuss the question with you so that it will be understanding question is very important, students. If once you understand the question, then solution becomes very easy and simple. Let us understand the question first. Yeah, here you can see the question. Mr. Madan Mohan. Madan Mohan is name of the assessee, and he's transferred a residential house on 27th December. So here Mr. Madan Mohan is a assessee, and what he did, he is transferring his residential house. So here what is a capital asset? Residential house. In case of house, land and buildings, we have to consider how many years period? 2 years period to determine whether that is short term capital asset or long term capital asset. Okay. So when he purchased this asset, let us read the question, then we will come to know. But transferring means he is selling. Okay, he is selling that asset during the previous year. When he is selling on 27th December. Okay, he is selling on 27th December 2023. So 2023 is our previous year. So he is selling that house during the previous year for 99 lakhs rupees. 99 lakhs is a selling price. We have to consider it as a consideration received. So selling price always is treated as consideration received. So here in this problem, consideration received is 99 lakhs. And expenses on transfer amounted to 2 percentage is given. So whenever any expenses on transfer means sale. Okay, expenses on sales. So this is nothing but selling expenses, nothing but transfer expenses. So if percentage is given, that percentage should be calculated on sales, 99 lakhs here, so that we will get the value of selling expenses. Next, the building was acquired for 6 lakhs. So he purchased that building for how many rupees? 6 lakhs. 6 lakhs is a purchasing price, and when he purchased in 2001 and 2, CII means cost inflation index number 100. So he purchased during 2001 and 2. So he sold in 2023. He used that asset for more than 2 years period. So it is long term capital asset. Okay. And here number of that purchasing year is 100. And 2,10,000 rupees was spent to add one more floor in 2002 and 3, and CII is 105. So here on the same house, he constructed one more floor. Okay, he added one more floor. This is nothing but improvement. Okay, whenever any additions are made, we have to treat it as a improvement. So we need to calculate index to cost of improvement also for this asset. Okay, in which year he added one more floor? 2002 and 3. Number is 105. And on 15th February 2024, so after selling that asset, okay, in December 2023 he sold the asset, and later on, okay, within 2 months, what happened? He purchased, and number of that is 348. So previous year number is 348. Our previous year starts from April 1st 2023 to ends on 31st March 2024. So 24 on February 24, and number is given 348. So previous year number is 348. The following in the name of his wife in Maharashtra state. Okay, so he purchased some following. Okay, after selling the residential house for 99 lakhs, the amount whatever he gets out of that, he is purchasing few assets in his wife name. Okay, so even he purchased in his wife name, that is eligible for deduction under section 54. But whatever he purchased, all those are not eligible. He has to sell one asset and similar kind of asset he can purchase. That is eligible for deduction. Okay, and next, if he invests money in capital gains scheme or notified securities, that is also eligible for deduction under section 54. Okay, so let us see what actually he purchased. So ready built house in Nanded city. So he purchased one house. He sold one house and purchasing one house. So it is eligible for deduction 15 lakhs rupees. Next, a flat in Amaravati city. Okay, so he is purchasing in India only. So one flat, that is also nothing but a residential house for 30 lakhs. But in case of houses, if we purchase, he may purchase any number of house. Okay, but the deduction is allowed only for two houses. Okay, here he purchased one house and one flat. So we can allow deduction under section 54, these two. Okay, if you purchase one more house, that is not allowed as deduction. Only it is limited to only two houses. So 45 lakhs is eligible now. Open land for 5 lakhs in Akola. So open land is different asset. He is purchasing house and purchasing open land, not eligible for deduction. Okay, this is not eligible for deduction. Gold ornaments 2 lakhs. He is selling residential house and purchasing gold ornaments. Okay, it is not same asset. So this is also not eligible for deduction. And deposit of 10 lakhs in the bank under capital gain scheme, this is allowed as deduction. Okay, so under section 54 we are going to allow here 3 deductions. Okay, first one is 15 lakhs, second one is 30 lakhs, and third one is 10 lakhs. Okay, total 45 plus 10, 55 lakhs we are going to give deduction. And remember one point, students, whenever he deposits in capital gain scheme, that is eligible for deduction only up to 2 crores. Okay, here it is 10 lakhs only, so we can take it. Okay, hope this is clear. So next, let us go. And he is claiming exemption under section 54 for the above purchase for and for deposit in the bank, compute income from capital gain. So they are asking us to calculate income from capital gain. Okay, let us go and calculate it. So this is a format that we need to follow whenever we are going to calculate income from capital gain. Always we have to follow this procedure. So here first we should write name of the assessee on the top. Computation of income from capital gain of Mr. We should write name of the person. What is the name of the assessee here? Mr. Madan Mohan. So let us write here Mr. Madan Mohan. Mr. Madan Mohan for the assessment year 2024 and 25. This is a heading that we should give on the top. Okay, and later on we should follow the format. So you have to draw columns and you have to write all these items one under the other in the order. So particulars amount columns we should draw, and always first item is consideration received. So consideration received means selling price. If he sells any asset, then how much amount he is receiving out of that sale, that is known as consideration received. Here he is receiving how much amount? 99 lakhs. So we are going to record here in the place of consideration received 99 lakhs. Let us write it. Okay, next, selling expenses, transfer expenses. They gave percentage here, 2%. So let us calculate that 2% on 99 lakhs so that we can write there. Okay, how to calculate here? 99 lakhs into 2 by 100. Okay, you should calculate it and see how much you are getting. 99 lakhs into 2 by 100. So let me calculate 99 lakhs into 2 by 100. So we will get 1,98,000. Let me write here 1,98,000. Okay. So after writing selling expenses, that should be deducted from the consideration received. That is 99 lakhs. Okay, 99 lakhs minus 1,98,000. So we get 97 lakhs 2,000. Okay, we have to call it as what? Net consideration. We should call it as net consideration. So after deducting selling expenses from consideration received, we get one value that is known as net consideration. Hope this is clear for everyone. And let us go to next one. Next we have to deduct cost of acquisition or indexed cost of acquisition. Any one we have to deduct. So what to deduct and why to deduct? Cost of acquisition we deduct in case of short term capital asset, but here our asset is not short term capital asset, it is long term capital asset. So indexed cost of acquisition should be deducted. Okay, why it is long term capital asset? Because he purchased in 2001 and 2 and he is selling in 2023. He used that house, okay, for more than 2 years and selling it off. Then we have to treat it as long term capital asset. Then we should deduct indexed cost of acquisition but not cost of acquisition. I am removing this. Okay. And indexed cost of acquisition should be calculated. That won't be given in the question. We should calculate it. So whenever we calculate, we should use these two formulas for calculation of indexed cost of acquisition. Model 1 and model 2. So which is suitable, that should be selected for our problem. So model 1, when to use? If the asset is purchased by the assessee before 1-4-2001. But here the asset is purchased by the assessee during 2001 only. Okay, 2001 and 2. Means after first 1-4-2001, after April 1st 2001 he purchased. So that is not before, that is after only. Okay. So model 2 we can apply if the asset is purchased by the assessee after 1-4-2001. Okay, that model 2 formula we can apply. So model 1 I am removing it because that is not suitable for this problem. We have to use model 2. Okay, because asset is purchased after 1-4-2001. Hope this is clear for everyone. Then let us calculate it. Indexed cost of acquisition. Indexed cost of acquisition is equal to original cost of the asset. You can see the formula, students. Same formula we are going to follow and we are going to substitute the values. Indexed cost of acquisition is equal to original cost of the asset. What is the original cost, purchasing price of the asset? The building was acquired for 6 lakhs. Okay, so he is purchasing that house for 6 lakhs rupees. Let us write original cost 6 lakhs. So 6 lakhs into previous year index. Previous year index number is 348, students, divided by index of the purchasing year. He is purchasing in 2001 and 2 and they gave number also, that is 100. So we are going to write it as 100 now. Divided by 100. Okay. So next, if we calculate this, how much we are going to get? 6 lakhs into 348 divided by 100. So we get 20 lakhs 88,000. So indexed cost of acquisition is equal to 20 lakhs 88,000. So this is indexed cost of acquisition. Let us go and record in our statement format. So here indexed cost of acquisition I am writing 20 lakhs 88,000. Okay, then we have to deduct this 20 lakhs 88,000 from 97 lakhs 2,000. So how much we get, that should be checked. We get 76 lakhs 14,000. Let me write here 76 lakhs 14,000. Okay, so next, after that we have to deduct indexed cost of improvement. So if any additions are made to the asset, then we have to deduct indexed cost of improvement. Okay, so here what actually are made, whether they made any additions? Yes. Okay, they constructed one floor in 2002 and 3 for 2 lakhs. Here you can see for 2 lakhs 10,000 rupees. Okay, they used 2 lakhs 10,000 rupees and they spent that money to add one more floor in 2002 and 3. The number of 2002 and 3 is 105. So whenever any additions are made to the asset, then that is known as improvement. Okay, since this is long term asset, we need to deduct indexed cost of improvement. Hope this is clear for everyone. Let us go and calculate that. Okay, indexed cost of improvement we are going to deduct. So how much cost of improvement? So how much they spent? 2 lakhs 10,000 into previous year index number we should take, students. That is a formula actually. How much cost we incur for improvement? 2 lakh 10,000 into the previous year index number, that is 348, divided by index of the improving year. So what is the index number of the improving year? In which year they improved? In 2002 and 3. Number is 105. Okay, that number should be taken. Let me take here 105. Okay, so let us see how much we are going to get. 2 lakhs 10,000 into 348 divided by 105. 6 lakhs 96,000. Let us record that in the amount column. 6 lakhs 96,000. Okay, and this is indexed cost of improvement. Let us deduct that indexed cost of improvement from the previous value, that is 7 lakhs 61,000. Sorry, 76 lakhs 14,000, students. 76 lakhs 14,000 minus 76 lakhs 14,000 minus 6 lakhs 96,000. So we get 69 lakhs 18,000. 69 lakhs 18,000. Okay, so this much we get 69 lakhs 18,000. And next we are going to deduct deductions under section 54. If any deductions are there, we should deduct here by following all the rules and regulations. Here is selling residential house and purchasing 2 houses, 1 house and 1 flat. Those 2 are eligible. Okay, that is limited only up to 2 houses. And next is investing some amount in capital gain scheme also, that is also eligible. So 3 are eligible here. Just now we discussed while discussing the question, I explained that 3 items are eligible for deduction under section 54, but we can't give completely all those here. We should follow the rules and regulations. So how we are going to follow? This is a rule for deduction under section 54, students. So least of the 2 will be allowed as deduction. First one is amount of capital gain available. See how much capital gain is available here. 6 lakhs 91,000, 69 lakhs 18,000. 69 lakhs 18,000 is available. Okay, that is amount of capital gain available. Let me write here 69 lakhs 18,000. That is amount of capital gain available. And amount eligible for reduction. 3 amounts are eligible for reduction. One is ready built house 15 lakhs, and second one is a flat in Amaravati city, that is how much here? 30 lakhs, that is eligible. Okay, and capital gain scheme 10 lakhs is eligible. Total 3, 15 plus 30, 45 lakhs, and plus 10 lakhs, 55 lakhs is eligible for reduction. Okay, so 55 lakhs. Out of these 2, least one should be selected. Least one is 55 lakhs. Select that. how to select? You have to draw one circle around 55 lakhs, but I am just changing the color. Okay, I selected 55 lakhs, but can we give that? That should not be more than 10 crores. Okay, if it is more than 10 crores, you should give 10 crores deduction only. That is rule again. So 50, this is how much? 55 lakhs. So that is less than 10 crores. So we can allow that 55 lakhs as deduction under section 54. Hope this is clear. Okay, if it is suppose the selected amount is more than 10 crores, then don't allow that. Allow only 10 crores amount as deduction. So here they income tax department wants to limit the deduction only up to 10 crores. Deduction should not be given more than 10 crores. Okay, so here 55 lakhs is less than 10 crores, so we can give that completely 55 lakhs as deduction under section 54. So let us go there and give deduction there. 55 lakhs is a deduction under section 54. So you deduct that 55 lakhs from 69 lakhs 18,000. You get 14 lakhs 18,000. Okay, 14 lakhs 18,000 you get. That is income from capital gain. Hope you all understood. This is how we are going to do solution for calculation of income from capital gain. So very important here, because the deduction under section 54 we discussed, and few important points also we discussed here. Hope everyone understood this. If you understand this, share the video to other students, those who need it. Okay, let me show how actually we did this in the order one by one. This is a question, students, that I discussed with you. So I have taken this question from H. Premraj textbook, that is Pankaj Publications. So this is a question that I discussed with you. Next, this is a solution part. Always you have to give that heading on the top: computation of income from capital gain of Mr. Name of the assessee for the assessment year 2024 and 25. Particulars amount column should be drawn, and this is the order of format. Okay, you have to follow the same order whenever you are going to do this solution. Okay, so this is how we did the solution, and under this formula for index to cost of acquisition. Okay, so this is how we calculated index to cost of acquisition by taking model 2 formula. And next, this is a working notes for deduction under section 54. Okay, so this is what we discussed now. Like the video, share it and subscribe the channel. Thank you.